So in today's video, I'm going to explain how I took this trade on EURUSD, and this trade was posted on my Telegram channel. Like I say, I just officially launched my Telegram channel, and it's free. It's free for Signal. So I send this trade to my Telegram channel. So let me show you the before of this trade. So this is the Telegram channel. This is the Telegram channel. You can see right here. So this is the trade here. This is the trade here that I sent to the group. Alright, so let's go back to trading view. So this is a trade I took on EURUSD. You can see the trade reverse and almost take me out, but nevertheless, since the setup was valid, it still play out. Alright, so initially EURUSD was on an uptrend. So when you take out this zone here, and I check my higher time frame, I discovered that okay, that the trend has changed. So when it was trending down, I was waiting for a double break of structure, and I got my double break of structure here. I got my double break of structure here when price took out this zone here and this zone here. So let me check the time frame that I saw this setup. Should be 1 hour time frame setup. Alright, so this is a 1 hour time frame setup. So price took out this zone and this zone, giving me a double break of structure. Alright, so this bearish candle here take out this zone here, this key level here, and then this key level as well. After that, it gave me a double break of structure, and then I wait for my inducement. Like I say, inducement is the first value pullback after a market structure shift or a double break of structure. In this scenario, this is a double break of structure. So let me zoom in so that you can see very well. Alright, so this is it. Market took out this zone here and then this zone, giving us a double break of structure. Then after that, I wait for my inducement. Inducement is the first value pullback after your market structure shift or double break of structure. In this scenario, our inducement is the first value pullback after our double break of structure. So market pullback with this bearish candle and then close. So we mark this place as our valid inducement. And remember, when this inducement pull back, it does not touch any point of interest. If you touch any point of interest that you want to use as a valid point of interest to take your order, that means that point of interest is invalid. It has to touch the wick, not the body. If you touch the wick, the point of interest is still valid, but if you touch the body, the point of interest is no longer valid to be used as your entry. Alright, so you must ensure that the pullback that you have as your inducement does not touch the body of the candle. You can maybe sometimes you will not even touch the wick, but if you touch the wick, the point of interest is still valid. So if you pull back and touch the wick, the point of interest is still valid. If you touch the body, it's no longer valid. Alright, so I got my pullback, which is my inducement after my double break of structure. It does not touch any point of interest. So what are the rules in picking a proper point of interest? Rule number 1 says there must be a double break of structure in terms of continuation. So I have my double break of structure. The second rule says there must be an inducement, which we got our inducement, which is the first value pullback after our double break of structure. Then the the third rule says that you should mark out all the possible point of interest. So we have this breaker block here. You can see this breaker and this breaker, they fall under the same zone. So this breaker here, I mark this breaker here, and then what are other point of interest we have? We have this other block that trigger this double breaker structure. So these are the two valid point of interest that we have. So this is supposed to be another other block here. Yeah, this is supposed to be another other block here at this level. Alright. But since it's embedded in this, I just mark only these two point of interest. Alright. So now I got my double breaker structure, I got my inducement, and then mark all the point of interest that I need to use. Now the fourth rule says that the point of interest needs to be unmitigated. So as market was creating an inducement, the point of interest that we have, which is the 2 point of interest, was not mitigated because this candle that causes this candle that gives us inducement, that pullback, it does not touch the body of any point of interest I want to make use of. So the 2 point of interest is still valid. Now some of you will be confused. Okay, since we have 2 point of interest, which one are we to use? Now the last row, which is the fifth row, will tell you the point of interest that you are going to use, which says that you should choose the point of interest that is closest to the inducement. So within this point of interest, this first one and this second one, which one is closest to the inducement? Is this one here. This is the point of interest that is closest to the inducement. That's why I took this trade. I took this trade here from this point of interest. I took this trade from this zone and then give room for spread. And you can see this is 1:5 risk to reward ratio. The market, after the double reconstruction, the market pull back and trigger my point of interest, and the other block here causes this shift because on EURUSD, GBP USD, BTC, other blocks are very powerful. This other block here, when market retraces to this other block here, it pushes the market up. That's why the market push up from this other block, as if you want to take me out. Market pull from this other block here and then push up. I know that there was going to be a retracement there, but I don't know that it's going to be powerful like this. So it pull up, but it does not hit my LSO. Alright, so this is it. Market did not take me out, and then retrace back and give me my profit. Alright, so this is it. So as simple as that. So you can see the same thing happen here on EURUSD. You can see here there is a double breaker structure. When this candle, this bearish candle, take out this zone here, you can see the bearish candle here, take out this zone and then this zone. But before I explain this, let me tell you why I place my take profit at where it is. Alright, like I said, when we use liquidity to enter, so we use liquidity to get out of the market, you know. So as the market was trending up, it was trending up and it was creating a series of higher highs and higher lows. Alright, so this is a trend and liquidity. So as market was selling, my take profit is as clearing out this trend and liquidity. That is why I put my take profit here to clear out this trend line liquidity. Alright, so now back to what I was explaining. So you can see the same thing is happening here. Since you already know that market is in a downtrend, so what you should be focusing on is to look for a double breaker structure. So on a 1 hour time frame, you see that this bearish candle here, this particular bearish candle here, break 2 key levels, a bit 3 key levels. Yes, you take out this zone here, take out this zone here, and then this is another zone that is existing on its own. Take out this zone as well. This is what we call a multiple break of structure. When market break multiple break of structure, it should give you more insight or more idea that zone is going to hold, because it means that the numbers of sellers or the numbers of buyers in that market are much, so market is going to pull in that direction. All right, so after we got this multiple break of structure, when this market take out these zones, take out those key zones, you can see even this zone here was taken out, even this zone was taken out as well. But these are the major zones, this one here, this and this. So we got our multiple break of structure. After our multiple break of structure, the next thing we should be looking out for, this strategy that we normally trade, is all about market structure, liquidity, and point of interest. So after we got our market structure part of the strategy, then the next thing to be looking out for is the inducement part of the strategy. So the inducement part of the strategy that we make use of is what we call the liquidity part of the strategy. The liquidity part of the strategy that we make use of is what we call inducement liquidity. And inducement liquidity is the first value pullback after your market structure shift or a double break of structure. So in this scenario, is after your double break of structure. So I got this pullback here after this double break of structure. Market take out this zone, take out this zone, take out this zone, and this zone. So get this our pullback here. This is our valid inducement. So I'll mark this place as my valid inducement. So mark this place as my valid inducement because this is where this bearish candle here, it can either be a bearish candle or a bullish candle in as much as it is a pullback. All right, so it can be a single candle as well, and it can also be a multiple candle, but it must pull back and then close below the candle that causes the double break of structure or the market structure shift. But in this scenario, a candle that causes the double break of structure. So we have this candle that causes multiple break of structure, and this inducement pull back and close. So now the next thing that we need to look out for is the rules in picking a proper point of interest. Rule number 1 say there must be a double break of structure or a multiple break of structure. In this scenario, we have multiple break of structure. The market take out this zone, take out this zone, this bearish candle, take out multiple zones. So the second rule say there must be an inducement. So we got our inducement here. This is the pullback after we got a double break of structure. So we got our inducement part of the strategy. It's the third rule says that you should mark out all the possible point of interest. So we have this breakout block here. You have to mark the body. We have this breakout block here. Then the body of. Then we have another here. The body. And then we have this other block here. All right, and this other block as well. This other block here is also part of it. So we have multiple point of interest. Now remember, the fourth rule says that the point of interest needs to be unmitigated. So the market was creating this pullback, it does not touch any point of interest. So all the point of interest are still valid to be used. So the last rule says that I should pick the point of interest that is closest to inducement. So the one that is closest to our inducement is this first one. That's why market sell from this zone here. So is this first one here. So this is the point of interest that we make use of. Alright, so that's why market sell from this zone. But I did not take this trade. I'll tell you the reason why I did not take this trade. So you short from here. I saw it, but I did not take it. I marked the zone, but I did not take the trade. I'll tell you why I did not take this trade. Alright, so this is it. We give room for spread. Now I wanted to take this trade, but where to take my TP I was a bit skeptical about it, because already market has cleared this trend line liquidity. This is the main reason why I did not take this trade. Market has cleared this trend line liquidity, so it is possible that price will reverse and begin to buy. That is why I did not take this trade. Market has cleared this trend line liquidity. It's possible to create a market structure shift and begin to buy. So in order to be on the safe side, I did not take this trade. If it happened that market has not cleared this trend line liquidity, I will have said, okay, this is an A plus setup, and then I'll take the trade. So because I'm supposed to say to clear this trend line liquidity this way. Alright, so this will be the end of the video. Please, if you check my channel, you'll discover that it has been days now I have not posted on the channel, because most of you, I'm giving you this knowledge for free. You are not paying a dime for it. But to like, to comment, you will not comment. To share, you will not share. You will not even refer your friend to this channel. You're just benefiting alone. Check out that channel. What they will teach you, they will not even give you a complete breakdown of analysis like this. I have so many videos that I'm supposed to create, but I did not feel encouraged to create more videos because you guys are not giving me what I want. You are not encouraging me to create more videos. I took a trade on GBP USD, and yes, I took two trades on GBP USD last week, which I'm supposed to create videos and tell you how I was able to take that trade, so that you can follow the same pattern and trade the way I trade. Like I said, anything that does not give me 1:3 risk to reward ratio and above, I don't take it. So you can have your own as well. Alright, and also there's something I'm working on currently. If the thing play out, I'm going to update you guys about it, and you guys will be so excited about it. To join my Telegram channel, the description of this video, you will see a link there. To join my Telegram channel, you can join. It's for free. Right, for now it's for free. I don't know if I will change my mind later, but for now it's for free. So join my Telegram channel. Let's trade together this week. Thank you guys.